All right. Again, thank you so much for being on the Team Wealth Builders Monday night international call here. And again, this is going to be understanding pullbacks and retests for optimal entries. Okay, for optimal entries. So let's go ahead and get into this, because I definitely believe, ladies and gentlemen, if you can understand these little pieces right here, then this will transform your trading tremendously. Because a lot of us have the questions of, well, Shawn, I kind of understand a little bit of support and resistance, but I don't really know when to get in. When is the right time to get in? And so that's exactly what we're going to solve today in this particular class, all right? So now let me go ahead and define what exactly is a pullback in the market. And I want you to understand this isn't just in Forex, okay? This is also in stock trading, all right? So this applies all across the board to no matter what you're trading. This applies to cryptocurrency, okay? Binary options. It applies to everything that you try: oil, gold, silver, you know, all of those commodities and different things. US 30, the indices. So it doesn't matter. The same structure still happens in each of those markets, okay? And so I did put on the top, I started doing this, that to get further reference to this in the I Am Master Academy, please go to the series 200 videos. And this video is FRX 215, FRX 215, which will talk more about pullbacks in the market. But simply put, a pullback in the market is a temporary pause, okay, or a retraction of price action in the market. And I'm going to talk about that. This retraction creates certain peaks in the market that occur within the continuation of an uptrend or downtrend. Okay, so I know that's a lot of a definition, and if you're like me, you're kind of like, Shawn, what do you mean? So guess what, guys? I made sure that I broke it down for you, and I made a picture, okay? So on the left-hand side, okay, when you see the market and it starts coming up, we start here at the bottom of this line and the market goes up. So we just imagine this being the candles, which is called price action. So price action merely means that as a currency, remember how we trade the foreign exchange market is we have one weak currency exchange with a strong currency. And what happens is one of the currency, we have the ask and the bid price, okay? So the ask price is associated with when you're selling in the market. When a currency is weak, the first three pieces of the currency, which is called the base pair, okay? Let's take USD JPY. So when USD JPY is weak, it's going to go down in a sell. And so we'll pay attention to the asking price, okay? And then, of course, if USD JPY, if USD was stronger than the JPY, then we'll go up in a buy. And we'll pay attention to the bid price. Okay, the bid price, B, the B for bid goes with buy. So then we'll pay attention to that particular price, okay? So here in this example, we have an uptrend where if we were using example USD JPY, we would assume that USD is strong, the base pair, okay? And as it goes up, what happens is this little pullback, this is what we call a pullback. This where it goes up and then it comes back down is the pullback. That's where the arrow is pointing to. And then it continues up. Okay, the pullback is the retraction in the market. And basically, when I define that, really what it is, we talked about this in one of the videos earlier in the Team Wealth Builders channel here on YouTube, is that different times when you see major pullbacks in the market, a lot of times what it is the banks, the central banks, okay, which are purchasing, or at this time, they're dumping. They're actually selling currencies in the market, and they're doing it by large volumes, okay? And so that's why we'll see a lot of counteraction or a different direction of the market. So this is where when they have a pullback, where majority of the people are in a buy, okay? And then all of a sudden it pulls back because now the banks are dumping basically millions and millions of dollars of that particular currency in the market so that it can continue in the upward trend. They can't do it all at once, because if they did, it would flood the market and put it in a nosedive, okay? So the banks, the central banks, when they have currencies, and also the giant retail traders, when they're wanting to sell it back into the market so that other people can buy the currency. They do it periodically. They do it in stages. And so that's a majority of when you see pullbacks in the market. Okay. Now, the whole question is, okay, Shawn, how does a pullback help me in trading, the little individual trader that's just starting? Well, the pullback is kind of like a rhythm. It's like a rhythm in the market. Okay. It's like up, up, down, up, up, down, up, up, down. So it's going to move in a rhythm because, in all honesty, ladies and gentlemen, the market is merely just a record of human behavior. That's really all trading is about, is human behavior. When people feel good about a currency, when they feel good about the USD because maybe some good news came out, maybe President Trump came with some unemployment rates that were better than normal. Maybe the economy was starting to turn around. Maybe they found a potential cure for the coronavirus, and then it makes the currency start to go up. When people feel good emotionally, then they're going to buy the currency. Okay. And so that will push it up. And then banks see this and they say, hey, since people are buying the USD currency, let's start putting out our USD, our dollars into the market. Let's go ahead and start periodically putting it out there. Hence, this is why we come up with the pullback in the market. Now, how does it help you as a trader? Well, it helps you identify how far or how the continuation of that trend is going. All right, it's going to help you to determine, okay, is it going to continue up or is this going to turn down? All right, so what happens is the market goes up in this line that starts, it pulls back, okay, and then it continues up. All right, and people are still buying, 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 and then guess what? Another pullback happens, and then you have what we call a higher high. Okay, so this little area here, the little hump where it turns and goes back up, this little hook, okay, this little valley right here is higher than this lower valley. And that's what we call higher highs, okay? You have a high here, then it's higher here, and then it's higher here, okay? Or you can look at the peaks. This peak here, this peak is higher than this peak is higher than this peak. So we understand it's continuing in an upward trend. Okay, now I'm going to share with you, because right now I just want you to understand what exactly is a pullback, and how this is going to help. And then at the end of this presentation, I'm going to show you how to use these pullbacks to make an enormous amount of money, okay, just in one trade going up, all right, instead of having to be in numerous trades all the time, all right. Same thing. Now let's go over here to the right-hand side. The same thing happens, ladies and gentlemen, when we're in a downtrend, okay. And so we start at this line at the top and we come down, all right, and then all of a sudden it does the same sort of hook, but then it pulls back up, comes down, does a hook, comes back up and peaks, come back again, do another hook and peaks again. So remember, this turnaround, this pullback up is a downtrend pullback. This is pulling back also, but you have a lower low. So we look at the hook, or this little valley, this little cup, and this one starts, and then there's a lower one. So we have a lower low. So we have higher highs and lower lows. And that lets us know that this is continuing in a downward trend. Now, the thing that you'll need to understand is that this doesn't last always. This usually happens after a retest in the market occurs. Okay, and in the next part, we're going to talk about what is a retest, Shawn. Okay, so let's explain that. So you'll see these pullbacks after we call a breakout. So we hit a level or a zone area where it's going to retest, and I'm about to define that, and then it's going to break out. And when it breaks out, it's going to look like this. It's either going to break out and look like an uptrend with pullbacks, or it's going to break out and do a downtrend with pullbacks. All right, so that's covering pullbacks. All right, so now let's go to what is a retest. What is a retest in the market? And again, I make reference to our IM Mastery Academy in the Series 300 videos, and this video is FRX 314. FRX 314. So make sure, guys, that after this, you go into the academy and make sure you review this video so you can get more on retests. All right. So a retest refers to price. Okay, we talked about price, and we're also talking about candles. The candles are price action, all right? It shows us what's happening in the market to the price. So price reversing direction after a breakout. Okay, now a breakout, remember I showed you could be an uptrend with pullbacks or a downtrend. So this happens, a retest actually happens after a breakout in a support or resistance zone area. Okay, and then it may return to that particular zone to see if it will hold or break that level. If it will hold or break that level. Now, this is really important too, because this is something, ladies and gentlemen, that I did not really embrace when I first got into the market. And again, this is why it's so important that I do introduce this to you and that you do more as far as looking at retests in the market, because I promise you, this will definitely help improve your trading drastically by understanding this early on, okay? So now, here's examples of retest zone areas, okay? So remember, in this first example right here to the top left, remember we were coming in a downtrend, all right? And then it would hit a certain level. This would be kind of our support line here that comes across. And what happens is we see candles come and hit this. So we'd see a bunch of red candles, and then all of a sudden it would hit here and it would do a pullback. It will pull back and you'll see a couple blue candles, okay? And then you'll see red, and then it will break underneath this, okay? It'll break underneath, but then guess what? It will pull back again. And the pullback will come up here and retest this area, okay? Now, the thing that you pay attention to is, well, Shawn, does it pass this area? Because if it passes this area, then we could be into consolidation. If this low was the same as this low up here, then we're going in a straight line. But remember, we're looking for lower lows and higher highs. So it's low here, and then guess what? We have a lower low. Okay, this one low is here at this line, at this line. Then it breaks the line and comes to a lower low, but then it pulls back, and now it's coming down to another low. So this lets us know that it has retested this area, but then it's continuing downward for a lower low. All right. If it retested this area and stayed here, let's say it pulled back and then came back and retested again. Okay, then we could possibly look at it going into a straight line. Okay, which means that the market is trying to find balance. Okay, as you go through the IM Academy, remember the market moves in three directions. It moves in an uptrend, okay, it moves upward. It goes in a downtrend, downward, and it goes sideways, which we call consolidation, okay, or ranging. Consolidation or ranging, all right? In this other example over here to the top right, all right, this one is heading in an uptrend, okay? It's a trend line that's slightly up at it. It looks like about a 45-degree angle or 35-degree angle or so. And so what happens is the market goes up in a buy, and then it does a pullback, but it pulls back to this same area here. It forms a line, and it's not a visible line. It's kind of a hidden line that reveals itself after 2 or 3 retests, okay? After 2 times of you seeing it kind of land in the same area, now we have a basis for a trend line, okay? Or we have a basis for a support line or a resistance line. We have to see at least 2 or 3 times come around the same area. So it came here. So let's say earlier it probably touched this line here, came up, pulled back, did a pullback, touched this line here, did a pullback, and then it broke this line, but then it touched again here in this middle area. So it retested it, but it didn't go back up to match this high here or to match where this line was. It wasn't in a straight line at an angle. Instead, it was lower. So this is a lower low here, okay? And so it touched there, and now it's breaking downward. So it retested this area, and it didn't go higher. Instead, it went lower. So now it's turning to a different trend, okay? Turning to a different trend. And I'm going to show you on a chart so you can really start putting this together, okay? So I want to make sure I just introduce to you how the different ways that you could see a retest, and then we're going to translate it over to candles so you can look at it. In this bottom left corner, we see this is what we kind of call a channeling wedge, okay? It makes a wedge. So when 2 lines like this come out like this, like a V, it's a wedge. And so you'll see this as consolidation. when it's going sideways. Remember, it kind of goes in a straight line, and it's kind of touching here on the bottom in the same area. It's touching in the tops in the same area, but it's going to be a time that it's going to break out. And this is what they call a breakout. So it breaks this line. Instead of going to this line and then coming back down, it broke through, touched the top of the line, and now it's going up. Now it's coming into an uptrend. So it went sideways, left to right, and then it broke out of this wedge, and now it's starting to shoot upward. All right, so it retested, even though it did these pullbacks in between, it retested this line and went up. And this one is kind of a declining channel. This is a channel now. So it's not a wedge because it doesn't have a closed part. It's just a wedge where it comes down at an angle, all right, in a straight line. So it's coming down at an angle in a sell, and then it breaks above this line, retests the top of the line, and then this also goes up into a buy. So that's another retested area or zone, okay? And so you're not going to get it all right now. So don't feel intimidated. Don't feel like, oh my gosh, Shawn, this is like Japanese. No, as you start to trade in your trading journey, these things will start showing itself. So you just need more experience, guys, because I'm still working at it. Trust me, after 3 years, I'm still learning to identify certain areas that are being retested, okay? And so you just get better, better, and better, but I'm just training your eyes to know that there is a way that you can see when a retest happens in a certain area, okay? So let's move on to the next one. All right, so here's some other examples of retests right here. And I know it's kind of smaller here. Let me see, can I pull this up? Don't know if I can. Won't let me really blow it up, but basically what you'll see is in these areas, we'll start over here from the left and work our way to the right. So what happens is the market was here, it came down to this area, this gray shaded area, and it started identifying itself as a level of support. So support means the floor, kind of like the floor of your apartment, the floor of your home. It's the support, it's what you walk on to support you while you're walking. But then the ceiling is called resistance. That's the top. That's where your ceiling would be. So what happened is the market came and retested, okay? It retested in this area here. This is the first spot. Then it went up, came back down, retested this area again. See, these are all in the same line areas. Went back up, came all the way back down, retested in a third and fourth area, and actually a fifth area. So 5 times it retested in this area to see if it will hold, and it held 5 different times. Then on the 6th time, it broke through. It broke through with this large candle that you see. It came down, went all the way down, came back up, and actually, if some of y'all can see it, it formed what we call a W pattern, okay? It came down here, came up, in the middle, it stopped here, came back down, and then it retested back in this area again. So this was a major retested area here, and then it came back down. All right, so I did a video earlier that talked about M's and W's, which is called double tops and double bottoms. So this right here is called a double bottom because it came down, looks like a W. It came down, made a point, came up in the middle like the middle of a W, came down again, and then went back up. So if you're able to identify like the bottom, the wedge up and down, you could be able to catch this bottom part and then ride this up, and you would have made a lot of pips doing that, okay? Just recognizing the patterns. So like I said, guys, there's a lot of pieces, there's little pieces here to trading, but once you do this over time and you practice, this is why it's so important for you to be in your demo doing 100 to 200 trades, because as you look at these charts and you put in trades, you're gonna get better, 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 and better. You're gonna start recognizing patterns. You're gonna start seeing support and resistance areas. You're gonna start seeing the retest areas. You're gonna start understanding pullbacks. And it just takes time, you can't rush it, okay? But here, again, it came back and retested the same area, and then it went back down. So this is examples of zones or areas that's retested. Now, why do we call it a zone? Now, here's what I couldn't get when I first started. Is a lot of people put lines on their charts to mark their support and resistance. And so I'm thinking, well, what happens if it doesn't touch that line? Well, guys, the line is really just a a approximation of what the individual sees. All right. That doesn't mean that Placide is going to see the same thing. Doesn't mean that Dorian is going to see the same area that I see. Doesn't mean that Karen will see it. Doesn't mean that Latanya will see the same thing. This is just a reference for me to see that, hey, it looks like somewhere in this area is when it starts to turn around. And that can be a zone, a range of price. Okay, doesn't mean it's going to be the exactly right where you put the line. It may be a little above the line, maybe underneath, but that's why we make a block area. That's why it's shaded, because if you can see here where these candles are, it doesn't stop like at the top of the box. It doesn't necessarily stop right at the bottom of the box. It falls somewhere in the box. And so that's the zone area. That's the support area. That's possibly a resistance area. Okay. So I just want you to understand that these are just approximated areas, okay? Kind of like when you're playing sports, you know, when we play either, let's say, let me see, I'll use American football. You know, we have our end zone, and our end zones are pretty big. So even if you throw the ball and you get anywhere in that end zone, it's a touchdown, okay? If you're out of bounds, you go out of bounds, no matter what sport you're in, it's usually, you know, it is a line, but usually it has a little area. So sometimes a lot of these areas just have approximations. As long as you're somewhere in that area, you're in the end zone, okay? And so that's kind of how it works when compared to that. Now, I pulled all that together, guys, so that you could take these pieces and now start developing your strategy using pullbacks and retests. All right. So I made a list, some strategy tips to use for your pullbacks and retests so that now you can truly find the optimal entry. Okay. If you can, you know, take a snapshot of this with your phone, or again, we'll catch this in the replay. You want to write this down in your trading journal or your trading notebook, because I promise you these things have tremendously helped me in my trading. And this is what a lot of the IM educators talk about when they're training. And so if you can just implement this in your trading style, I promise you, you're going to do exceptionally well, gaining more pips. All right. So the first thing is the pullbacks. Okay. What I want you to know is, if you didn't know this, which it took me a while to learn, is that pullbacks move in patterns, and they either move in 3, 5, or 7 pushes up or pushes down before a possible reversal. Okay. So 3, 5s, and 7s. So they move in odd numbers. Okay. So you might see those higher highs and lower lows. You'll count those. You'll count 1, 2, 3. So it's either going to reverse on the 4th one. If it goes to 4, then it may reverse on the 5th one, or excuse me, it'll go to 5, and then it'll reverse on the 6th. And then normally if it makes it to 7, then on number 8, it definitely will reverse. That's just the patterns of the market. That's just what you see. Okay. The second one is you can enter right after a pullback, okay, and have several positions in one trend. Let me go backwards so I can identify what I'm talking about here. All right. So in this example, we had 3 pushes up. So now this is what I mean by pullbacks. So it pushed up once, it pulled back, pushed up twice, pull back, pushed up a 3rd time, pull back. And normally, guys, when you look in the market, right when it gets here, it'll hit an area of resistance, and then it'll turn back around and do what it did over here on the downtrend. It'll come down, pull up once, pull down, pull back twice, pull down, pull back 3 times, pull down, and then it'll hit the 4th. And then guess what? It'll hit an area of support, and it'll start to turn back up. And you will see this over again. 3, 5, and 7s. 3, 5s, and 7s. Okay. Now let's talk about using the pullback to enter. When you see a pullback like this and you understand that, look, this is probably going to end up in 3, 5s, or 7. Well, now you can count it. All right. So I could come up here. I see number 1, push number 2. Okay. So let's say I get to number 2 and it pulls back. I can enter right here where it starts to push. Okay. And then it pushes. So let's say I enter right here at this little hook, this little valley. I jump in. It pulled back. It was red, red, red. I wait for the next blue candle, and then I jump in on the blue candle, and then it goes up. So now I'm catching these pips. Guess what? It pulls back one more time, and guess what? I catch it again after it does another blue candle, and I can open up a second trade. Okay, still the same trend, but I could jump in the second time. Now I got two trades going in the same direction, and now when it reaches my area of resistance at the top, I could get out. So now I made money on the trend. Okay, now let's say I've been watching this for a while, so I wrote it up 3 times. Now it hits my area of resistance. Now it's coming down. Well, it came up 3 to 4 times, so I pretty much know that if it follows that pattern, I could write it down for 3 or 4 times going down. So now I'm coming down in the sell. So right when I see it retest on the top, I could write it down. So I'll say I'm in one trade coming down, then it pulls back. Right here at this crest, at this peak, I enter a second trade. So now I come down, pulls back up again. Right here, I can enter into my third trade. Come down, peak again, I can enter into a fourth trade and then ride it on down and take my profit. There's a lot of people that compound their account very quickly. So you try to understand in Forex trading, well, how can you take merely $100 and change it into $500 or $600 in the course of 24 to 48 hours? By doing stuff like that, by understanding pullbacks, by understanding that you can find entries in the same trend. Okay, and then when it retests and reverses trend, I can jump back in and ride 3 or 4 trades downward. Or let's say it went 3 trades up, it consolidated or ranged, it hit the resistance area, went in a straight line, and then you confirm it and it continues going up again. Well, guess what? If it continues going up again, most likely it's going to continue for another 3 to 5 or 7 pushes up. And I could jump in for more trades, guys. Okay, so this is just a way to understand how this can optimize your trading. Okay, now here's another thing. It's optimal to enter using a lower time frame to anticipate the pullback timing. So what does that mean? If most of us are, let's say, on a 15-minute chart, or you're on an hour chart because you're a day trader, or maybe you're on a 4-hour chart because you're a swing trader, you can go down if it starts to be in a pullback, all right, where it's pulling back in the market. What you do is go a time frame lower, and that will help you get in sooner, so you can catch the trend back up. Okay, so I'll demonstrate that here in a minute. But basically, let's say you're on a 15-minute chart and it was blue, 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 and then all of a sudden you're on a 15 minutes. Now remember, every candle takes 15 minutes to make. So then it starts going red. So now you see red, that's 15 minutes, and then another red for 30 minutes. So now I want to say, well, it should be ready to start going back in an uptrend. Let me take a look. So now I drop down to the 5-minute, and then all of a sudden I start seeing 1, 2, 3 blue candles. This will tell me, you know what? Because on the 5-minute I consecutively see 3 blue candles, now I could probably enter to ride the trend back up. So now I can get in early. I could tighten my entry a little bit more. Instead of waiting for 3 15-minute candles, I can wait for 2 or 3 5-minute candles. And then I can jump in early, and then I can ride that trend and catch more pips that way. Okay? So that's a way that you use the time frames to help you out. If you're on an hour, okay, then you could drop down either to the 30-minute or the 15-minute. And then you could say, oh, okay, I've been in a sell. I've been in a sell for about an hour. I need to find out when it's going to start going back into the trend, going back to a buy trend. So I might go down to the 15-minute and start seeing 1 to 2 15-minute candles that are blue. And then I say, you know what? I'll get in now. So now I'm getting in 30 minutes earlier and catching more pips because I went to a lower time frame. Okay. Number 4, use a minimum of 2 retest areas to find a strong area of support and resistance for entering. This is more for when you're marking up your charts. You need to see, remember I was showing on the chart, let me go back, and I was showing 5 areas. So I said you need a minimum of at least 2 areas, 2 to 3 areas. So right here at the beginning, all the way over to the left, we see 1 area here. all right? And it goes up and then it comes down. Well, guess what? Now it's testing it a second time. So now this helps me to identify that this could possibly be an area of support or area of resistance. It goes back up again and actually retests here a third time. So once I see it 1, 2, 3, because what happened is it touched this area, went up a little bit, came back down, retested again. So now I have 3 areas to let me know, yes, this is an area of support or resistance that I need to pay attention to. So you at least need a minimum of 2 areas to confirm that this could possibly be a support resistance. And also you saw it turned into 5 different spots. So it was good to assume that something could happen once it reaches this area. So what does that mean for me as a trader? That means that once it went up and came back down, that I at least can trade anywhere, especially when I was at the very top from this area of resistance, I could possibly trade it all the way back down to this area of support because I had at least 3 confirmations before that told me I need to pay attention to this area. Okay? That's why the 2 or 3 spots or touching that same area is important. All right, number 5, use your confirmations of 2 to 3 candles, leaving a retest for an optimal entry. So what I mean for that is, let me go back to that example. So over here, I'm gonna pick here, and I wish I could blow this up a little bit more. Let me see, will it allow me to? Not really. Okay, so it won't let me do it, but I'll pull it up on a trading view. So even though we're in an area of resistance here, okay, where it retested in this area, the question is, well, when do I get in? Okay, because obviously it's leaving to go down in a sell. And so what you want to do is you're going to identify at least 2 to 3 candles of the same color going in that direction before you decide to jump in. Now, some people will jump right in, but then they get caught up and it reverses on them. But if you are watching the retest, after it starts to leave the retest, you need to start looking for that, for the candle to have a lower low or higher high. That means a candle opens and then it closes on the bottom. And then the next candle closes at that bottom and then it closes lower. And then the third one opens there and then that closes lower. When you start seeing it stair step down or stair step up, this lets you know, yes, I can actually get in this trade and feel confident that it will continue in that trend. Okay? Some people like to get in on 2 candles. That's perfectly fine. The more that you get comfortable and the more you know your pairs, then you can determine whether you want to wait for 2 candle confirmation or 3 candle. I definitely suggest a 3 candle confirmation, all right? Because you're not going to always be perfect, but you can be very close and not have to worry about it necessarily reversing as much, going the opposite direction, if you can at least wait for 3 candles in the same direction before you get in. All right. Now, it could either be 2 candles and then at the start of the 3rd candle get in, or you can wait for the 3rd candle to complete and get in after the 3rd candle, which means on the 4th candle, the beginning of the 4th, you would get in. All right. And so that's definitely a preference thing. That's definitely a trial and error and test. Okay. That's what you want to practice as a trader in your demo account is, let me start looking at these areas and see, do I want to get in after the 1st candle? Okay, maybe that doesn't work. Can I get in on the 2nd candle? All right, maybe I'll get on the 3rd candle or maybe the 4th. And so you want to start marking that down in your notebook so that you can find better entry points by looking and analyzing each of your trades that way, okay? And so that's going to conclude the PowerPoint presentation part. Now let's go ahead and look at the actual chart so that we can kind of see this in action as far as what pullbacks actually look like. All right, so now we're going to transition on to TradingView. So again, tradingview.com is what most educators will use because it's easier to draw on, and it holds on to your drawings. All right, so here we're looking at USD JPY. This obviously you see it's in an uptrend, okay? And so I can minimize this and we can kind of take a look at this a little bit. Okay, as you see, it starts kind of making a trend line here. Oops. Let's follow that. Come on down. All right. So just a vague trend line here. So let's blow this up. All right. So as you see, sorry guys, let's shrink it up. All right. So as you see, the candles kind of went up. Yeah, let me make this a little better. I'll start there. That's a good example. All right, so here, this is an example of where we started an uptrend up this way, and then you see these red candles, this is a pullback. All right, so let's make an arrow here so you guys can see that. So that's a pullback right there where you see those red candles. And it pulls back to this line here. And then we want to see it again. So it came up, it kind of went straight here, but it still ended up there. These lines kind of went up. And then look, it's pulling back now. All right. So what I want to see is if it's going to pull back to this line. Okay. I want to see are these red candles going to pull back to this line? If it does and then continues back up, oh, let me make this. Okay, then we have the continuation of that trend. And if that does happen, then I can jump in once it leaves this area right here. Once it touches this green line area, I can jump back in for another trade. Okay, if I was jumping in this trade, let's say I saw this trend and it pulled back, I possibly could have jumped in somewhere here and rode it up maybe. Okay, I could have, oops, I could have entered. This doesn't make it easy on the Zoom. So, yep, I could have entered. I know what I'll do. Like these. There you go. You know, I could have entered somewhere here, you know, to get in once I saw these. And this is what I meant by maybe a 2 candle or 3 candle confirmation. I see this doji candle, this little pin candle. Let me blow it up. Oop, 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 oop. Okay, let's try one more again. All right, so I see this doji candle, which is this one with a wick on the bottom. That's one candle. Obviously, the second candle, I wouldn't get in because I need it to be higher than this red and green to let me know it's breaking out of this area. Since it is a little higher, I'll look at this third candle. Oops. There we go. I would look at this third candle. Okay. So now I could enter, see it closed here. I could either enter at the beginning of this third candle, or I might be very conservative and wait for this third candle to finish and jump in on this fourth candle. Okay, you're right either way. It's all preference. I could have entered possibly on this candle right here. Oop, oop. All right, there we go. Okay, and I could have continued riding this up. I could have gotten in down here. You know, very possible. I could have got in somewhere here. Oh, let's pull that in. So I saw this green candle here. It looks like it's getting higher, but then I see this one. This is a higher high here, but then I could have gotten on this third one and just said, okay, this is my third candle confirmation. It's in the same area, headed upward. It's bouncing off this line. I could have stayed in, and guess what? I would have had to go through this little consolidation up and down, but I could have stayed in and got in here. If I was already in and then I saw this, I could get in a second position and got in on this candle. So I'd be in my second trade. Okay, if I didn't get in there, obviously, I could have rode it up some more and I could have gotten in up here if I needed to. All right, and then of course, you see it rode up, pull back again, and if it continues up, if all my confirmations and it doesn't break this line, I could get in again when it touches this line and still gain more pips. And this right here, oh my gosh, that was a lot of pips right there if you rode that most of the day. Let's just take a look at if you had gotten, let's say way down here. Ooh, oh, let me see, I haven't even got enough space. Let's shrink it up. Okay. Say I got in somewhere here. So it looks like it's possibly about 80 pips, somewhere around that, 80, 85 pips that you could have got into just looking at that. So just, you know, just a approximation there. All right, let me erase some of this and we're going to look at some more retests. That's what I want to look at. We're going to look at some retests. So now I could mark this top area here. See, now this is a perfect example here of a retested area. All right. Oops. So it came up, it was still going up, and then guess what? This doji, and this is why it's important that you understand candles in our Team Wealth Builder Facebook page. Obviously, if you're a signed up active member in I Am Master Academy and you're on Team Wealth Builder team, you can go to Team Wealth Builders International and then be joined to the group. And in our files section, we have the Candlestick Bible. All right. And it tells us what these candles mean. So when you see this doji at the top, preceded with a red candle afterward, this is a good sign that this is reversing. And it's also retesting. So it came here, it touched this line area. You saw the wicks on the top. So even the wicks on top was a sign to let me know that the momentum was starting to shift. And then, of course, this red candle, this is a bearish embellishing candle. And we call it that because this candle is bigger than these two candles here. Okay, almost as long as three of those candles. And then let's say that I wasn't sure. So I wait for this candle, I wait for the second candle, and then here's my third. Okay, after my third, I could got in on this fourth candle, and I would have definitely be good as far as going down for a sell. And again, it's a preference. Some people get in on this third candle. They wait for number 2 to end and get in on number 3. I think when you're starting off, it's great to wait for 3 candles, get in on number 4. Because you definitely would have caught these pips right here without any real stress. This alone right here, if this acts right, you know, that was a good 6, 7 pips, and it's still going. It's still getting larger, okay? So you could jump into this and be pretty good, okay? Just for a good optimal entry. All right, and it's very possible you could ride this all the way back down, at least up until maybe, you know, maybe this area right here. And the reason I put that line there is right here. This is a point where it had turned around before. So this is a major, you know, it looks like it could be a major support area, at least to pay attention to, excuse me. So I at least could catch all these pips all the way down, which if you're looking at this trade now, this is not a bad trade to get into for a sell. All the way down here is at least about 62 pips. So if that was $1 per pip, you could make $62. If that was $10 per pip, that could be possibly $620. $100 could be $6,200, $6,200, depending on what you have in your account. Okay. So guys, this is how you find the entries. Okay. You look for these peaks, it's higher high, still continues an uptrend, pullback, continues up. You could jump in right after the pullbacks and ride it up. Now it's down. So now you pretty much know, you don't know it 100% because anything could change the market, but it's very safe to assume that this is going to make it back downward to here. And you can pretty much follow it and it'll come down. And guess what? You'll wait for a pullback. When it pulls back, that's a good time to jump in for a second trade and it'll continue down. Pull back for a third and then continue down. And then you could have 3 active trades going down to the 62 pips. So just imagine if I did that, I could do, it would be $62 all the way from here to the bottom. But let's say it came down and I got in at $30. So now this is $30 on top of my 62. So I got $92. It comes down again. I get another $20. So now I go there and jump in again and makes it down here. On the same trade, I could make over $100 on just this one move. Or if I had a bigger account, let's say I was $620. The first trade, if I made it all the way down to the bottom, I made $620. Well, the second trade, I made $300. All right, because I got in part of the way and ride it all the way down. So that would be $300 on top of my $640. So now I got $940, and then I get in for another $200. So now we're almost $1,100 right on one trade. So you see how you can use pullbacks to your advantage and really help you out with your trading? It's just a matter of getting in and then just riding it down in the same area space that you saw before. Okay. So good. So, all right. Ladies and gentlemen, does anybody have any questions on that? Any questions? Please feel free to ask. Again, I know you may be new to the space. Make sure you go back to the reference areas that I talked about to further explain about these pullbacks and retests. But again, the more you practice with it and the more you start looking for it, the more you'll start finding optimal ways to jump into the trade. Okay? Any questions? Any questions at all?
I'm sorry. So when you say take profit, will it automatically take profit? I'm not, or how does that work?
Yes, ma'am. So take profit is, think of when you put in a trade like a GPS. Actually, let me go ahead and pull this up so you'll get it. And that was a good question. I saw that you asked it earlier. All right, so I'm in a particular trade now. And what I did is I was going up. This is USD JPY. Obviously, it started turning around, but I was going in for a buy. My take profit is the destination point that I wanted to go for me to make money. All right. On my chart, let me see if I can just make it real simple for you. Okay. On my chart, where the orange line is here, this is where I entered. I entered into the trade. I put in a destination price up here, which is approximately 30.1 pips. Okay. I put my stop loss here, and I actually have what we call a 1-to-2 ratio. So I'm going to give up 15 pips in order to make 30. Okay, so it's a 1-to-2. All right. If I lose the trade, not a big deal. I can afford to lose that. But my hopes is that I gain twice that going up here. All right. Your take profit is like a GPS. When you get in your car and you're ready to go somewhere, you got to put a address so that you can get there. And that's exactly what putting a take profit is. It's the end address or the end price that you want it to go. And you determine whether you want 10 pips, 15 pips, 35 pips, 120 pips. You determine that. Okay, and you put in that price. And what happens is when the candle reaches this line and touches it, okay, when it intersects with that, it's going to automatically close on its own. You don't have to do anything. And then whatever profit you made, it's going to automatically put it into your broker account.
Oh, wow.
Okay.
Okay.
So I don't have to watch
Okay.
this. Okay. I put the trade in. I'm just going to let it do what it's doing. Right now, it's consolidating. It's kind of going sideways, but it is pulling backwards. Very possible could turn into a sell and hit my stop loss, but I'm very confident that it will continue to turn around and head back up because it was on a strong uptrend most of the morning. Okay. And it may continue that. So I'm just going to sit in it and see what happens. Okay. But once it gets
Okay.
up here, yes, ma'am.
Okay. So what if it hits your bottom line, then
Then I lose
you'll
money.
lose.
Yeah.
Okay. You'll
But
lose whatever you set your limit to
exactly. So in this
lose.
particular one, yes, ma'am.
Okay.
So in this particular one, my profit, if I hit this one, I just came up with a random number of 30 pips because I usually put my stop loss somewhere between 15 to 20 to 30 pips at most, depending on how big of a trade I want to go. And then I double that for my take profit. Okay, so I'm sacrificing 15 pips to make 30. All right, so if I hit this up here, I'm going to make $8.39. Nothing big. It's a small lot size. If I lose, I'm going to lose $4.29. Okay.
Okay.
Now, the big thing about a stop loss is it's not bad. It's supposed to, it's risk management. It's to help me from not losing my entire account. So I'd rather
Right.
lose $4 than lose $14 or $400, by not finding a stop loss. That's the first thing. It's risk management. It's to protect it. Now I have to put it down here. Why? Because look, it doesn't move in a straight line. You see how it danced above my entry, came under my entry. It's going to kind of dance around, and you have to give it room to dance around. Okay. If I put it right next to it, as soon as it went under the entry, I'd have just lost it, and it could have went right back into profit, and I would have lost a chance to make the money because I didn't give it enough room to dance around. Okay. So you always have to do that. And so as you trade, you're going to find what's a comfortable area for you. It has to do with two things. Number one, I have to calculate my loss. Okay. So this is a very small balance. I'm willing to lose, $4 on 11. This is my small account, $11 account. I actually have more than that, but I lost a few trades, brought it down. No biggie. If I lose $4, okay, great. I'm down to what, $7. Not a problem. I can still recover from that. But if I win, guess what? I'm going to make $8, and then I'll bring my account back up. Okay. A good thing for the stop loss is everybody says, oh, they get so depressed because they hit my stop loss. They kept hitting my stop loss. You don't want to get paralyzed just because they hit your stop loss. Instead, what you need to get in the habit of reassessing the trade. Because obviously, if this hits my stop loss, that meant what? It's actually turning around into a downtrend. So LaTanya, if I realize that it hit my stop loss when I thought it was an uptrend and it's going the opposite direction, now what would I figure that it's doing? Or
Say that
anybody.
again. I'm sorry.
No problem. Or anybody can answer that. If I thought it was going up and
It's
then
a
all of a
sell
sudden,
now.
say again?
It's a sell, so you just got to change your strategy.
Absolutely. Perfect, Tiffany. That's all it is. You take your stop loss not as a oh, I'm depressed and I just lost and now I'm in my feelings. You take it as a chance to reassess the trade and say, okay, obviously now it's headed into a sell. It changed direction on me. I do my confirmations, whatever confirmation you have. Maybe it's checking the currency strength meter. Maybe it's just you're in your notes. You took the time of day. Maybe you have some Bollinger Bands and it came out of your Bollinger Bands now. And so now you know it's turning. Whatever it is, your strategy that you're learning, reassess if it hits your stop loss to see if you can jump back in and regain some of your profit. Okay. So if this hits my stop loss, all that's going to tell me is that, hey, it's actually going to make it way back down here. You see, I'll put this line down here at the bottom that, hey, it's possibly going to continue to go down here. So I'll just have to reassess it and just jump back in. If all my candles and everything match up, then I just ride it back down. And guess what? I'll get my money back. I'll get my $4 back and then some. Okay. So it's not only you guys, I had to change my way of thinking because I used to get bummed out if I got 3 trades that hit my stop loss, and then I get paralyzed. Like I just wouldn't jump back into a trade. I'd be like, no, I'm on a losing streak. I'm just gonna, but then guess what? I would look back after about an hour or two after at the same trade and said, well, all it did was reverse direction. I could have jumped back in and rode it for 100 pips the opposite direction and got all my money back and then some. So this is why they say, you know, try to take your emotions out of the trading. Try to look at it as this is just patterns and you're just trying to follow patterns like a game. This is why this is why children do so well in trading. This is why young people, because they don't look at it emotionally. They look at it as, oh, well, I guessed that it was going up. Obviously, it's going back down because I saw this big old trend. So it did it in the morning. And now the second part of the day goes down in a reversal. And then guess what? If you're marking this down in your notebook, you might see a pattern. Well, look, on Mondays, it always starts off going up high, 100 pips. And then by the second part of the day, it ends going down. Or there's a lot of pairs that from Monday through Wednesday, it goes up in an uptrend. And then from Wednesday evening till Friday, it goes in a downtrend. And then there's people that just ride every week. They do the same thing. I know it's doing it because I wrote it down and I followed the pattern. I studied the pair. That's how you get better in this space, is you find your pairs that you like, and then you keep on taking notes and you keep following it and you keep seeing what it's doing. So when you do hit your stop loss, find out why. Don't just give up. Just don't get emotional and say trading doesn't work for me. No, you can't control the market. You can only make great hypothetical guesses. And you use all the tools that you can to make better guesses. But here's the thing, even if your guess is wrong, you still have a strategy. You still have an option. It's either option A or B. You either buying or selling. So if the buy didn't work, then what do? You sell. If the sell don't work, you buy. And don't get paralyzed, okay? So that's all I have on that. Anybody else have any other questions? Great question, LaTanya. No questions? Everybody's good? Well, all right. Well, good. If that's the case there, then ladies and gentlemen, look, I had a great time working on that. Remember, pullbacks and retests. These are the areas that you want to pay attention to. Please make a reference to the videos that I talked about in the slides. All right. And look, keep practicing. You're going to get better. You just can't continue to be in this space with this incredible education at your fingertips, with all the 100+ educators in 14 different languages, and you're on an awesome team that's willing to help support you and work out the kinks for you week after week, day after day. You're going to get better. All of you are going to be multi-million-dollar traders. You just have to stick with the skill and continue to learn these pieces. Just like the job that you had, you stayed on your job to learn all the little nuances and the ups and downs of your job so you can be better at your job. So you need to think of this as your job is learning how to trade, and you're going to keep sticking with it day after day and continue studying so that you can get more proficient in it. And then by being more proficient, you're going to make a whole lot more money. Okay. So with that being said, guys, thank you so much. I appreciate you being on today's trading. Again, for those of you, if you have friends or anybody else and you want to, have this training again, we're going to do it again in approximately 4 hours and 20 minutes from now. We're going to go ahead and have this for our US team also. And so we'll go over the same thing again. So thank you so much. I appreciate you being on. And again, remember, you can invite guests at any time. Any questions, Karen?
Thank you.
Yeah.
Thank you, Shawn.
You're so welcome.
Thank you.
So welcome,
Thank
guys.
you.
All right.
Thank you, Shawn, for your time. That
Yes,
was
sir.
awesome. Karen, are you still there, Karen?
I am, yes.